Hi, this is Jack with Alpha Charts with an experiment week 4 update. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my channel. Again, I appreciate all the likes and all the subscribes. Keeps me motivated to keep making these videos. All right, so week 4 is in the books, and we had a pullback in the markets. And just looking at the SPX, and you can see, just looking at the daily chart, big pullback, Qs, again, pullback from all-time highs. Okay, so coming back to our spreadsheet, what are we seeing here? Right now, from week 1, the SPY and the Russell are losing money, right? Just a little bit, but losing money. The NASDAQ is not. It's up almost 3%. So right off the bat, we can see the relative strength. It's still in the NASDAQ, right? So right off the bat, we knew that for sure over the last 4 weeks. So we see that. So looking at my positions, I rearranged these for the biggest gain so far. So far, the trade desk has a 30% gain if I was to buy it. Again, this is a hypothetical account that I made to assess a few things. The most important thing I wanted to assess is if my top-down approach is appropriate in outperformance, meaning I'm going to go ahead and pick the best stocks in the best sectors with the best chance of outperforming the market as a whole. So that's the first thing. The second thing is I want to extend my hold time. I felt like I was trading in and out of stocks too quickly and not giving them enough time to really get that big time growth to go ahead and get as much gains as possible within the stocks. Couldn't find those words for a second there. To maximize my gains. So I want to let my positions work more for me. So again, so this will be a 12-week follow. Now, at 10% is when I would cut the position. So there is some risk management in here. As you can see, this is all color coded. So the color stands for green, meaning that the position is profitable. Yellow means that it is not profitable. I'm losing money in the position, but it has not stopped out at 10%. And if it turned red, it has stopped out at 10%. I will still follow it though, because I want to find out if 10% is the appropriate place to cut risk, to cut the position, but still maximize the gains. All right. And so this is week 4. So we're going to focus on this column first. Trade desk has done the best. This column right here, I added so we could see the percent change so far. So far, that's 30%, 28%. Etsy was 26%. Avalara did very well. Coupa Software, Datadog, Ping, HubSpot. Now, when we get to here, these were all double-digit increases. These were single-digit increases. So I did a later green color, and the yellow is losses. Now there's no red anymore. So this is pretty interesting here. That this week was the first week that nothing would have stopped out. So these reds turned into yellows. So that's really interesting. Looking at the percentages here, we had 15 out of 20 were green and 5 out of 20 are yellow. So 75% are green, 25% are yellow. And looking even further into this column, we are seeing that 5 out of 20 have had 20% or greater percent change. And 11 out of 20 has had double-digit gains. It's pretty impressive, right? 11 out of 20 double-digit gains. And once again, 15 out of 20 are showing gains, while 5 are showing losses. So the total, if you do an average of this whole column, is a 10.3% gain. Again, each one of these positions would have been equal weight. So we can do this. So 10.3% increase. Now looking at here, it beats the pants off of S&P and Russell, which were negative. And in this short 4 weeks, we are more than 3 times greater than the NASDAQ by itself. So far, this this experiment is working very well. It's working the way I would have hoped it's working, and it's confirming what I really was hoping it would confirm, which is validating my process. So if we can validate the process, then we just have to work on, the other data this will give us, which is risk management. Very important. How do we, was it appropriate to cut it here? I don't know. These are coming back at the end of 8 weeks. If they turn green, maybe this 10% should be 12% or 14%. I don't know. We'll have to see how that all works out and shakes out. If a lot of these end up turning red, then that's also going to tell us some information. Maybe we need to cut this even sooner and not give it so much leash. Maybe that 10% should be from the original price, and then this would be the 10% right here, or maybe it should be a trailing 10%. So that you're guaranteed to lock in a certain percentage of gains. I don't know. We will see. Here's one right here that was dark green, solar edge, and now is underwater, right? So again, this will tell us hopefully a lot of information at the end of all this. We don't need to go through the charts at this one because we can see the percentages. We know the trade desk is just rocketing, and we know that some of these not so much. So we'll see. The other piece to this, remember, is that we bought this June 1st indiscriminately, meaning we didn't look for things that were just breaking out or had a certain chart pattern or accumulation pattern or whatever specifically. We just bought them based on the top-down approach, which does account for accumulation a little bit, but definitely not on chart patterns. So, we can even potentially get even better by not buying extended stocks. The other piece is sometimes the great ones never give you that perfect entry. Again, there'll be a lot more data hopefully we're going to get from this. We have, we'll start week 5 this week on Monday. Markets are pretty choppy. We'll see what happens. And then we'll have a bunch more data over the next 4 weeks, and we'll see how this all shakes out. Hope you all are doing well. Stay safe out there with all the COVID stuff going on. Take care, and we'll talk to you next week.